G'day guys, welcome back to another Catapult Wealth market update. Today we've got the honour of having David Bassanese. He's the head economist of BetaShares, various high-level roles within government and treasury. David, thank you very much for coming.
No worries, great to be with you.
Great to see someone come back in from interstate again.
Yeah, it's great to be home. I'm originally from Adelaide, so it's always nice to come home and catch up with my own family. First time in a year since COVID struck.
Yeah, excellent. David, look, we've seen the market have a bit of a shake and now it's coming back again. What's going on? What's your view of the markets going forward?
Look, I think it's a pretty encouraging outlook. I mean, obviously the vaccines are rolling out. Hopefully we're sort of putting COVID behind us. The global growth rebound is ongoing. It's very strong. Corporate earnings globally very strong, particularly in the US. We've just had Joe Biden, President in the United States, unleash another $1.9 trillion stimulus package, $1,400 going out to virtually every household in the US at a time when the economy is already rebounding pretty well. Arguably didn't need that stimulus from a macro sense, but otherwise, yeah, so the growth outlook is pretty good. I mean, the only, I guess, wrinkle on that is, as we've seen in recent weeks, that, you know, people are fearing inflation's going to break out because of this strong rebound. We've seen bond yields go up. And the faster bond yields go up, the risk that valuations in the equity market come down. But I think the markets are overreacting to that inflation story. I think, again, unemployment rates globally are still higher than they were prior to COVID. Wages growth is pretty contained. We've still got, you know, globalisation, technology, these sort of things keeping a lid on price pressures. So I don't see that as you know, upsetting markets too much. So the outlook, you know, fingers crossed. With COVID, you know, what we don't want to see is, of course, there's a new variation of that emerge that's immune to the vaccines. That's like I guess the biggest risk to markets were that to happen. But from an economic point of view, it's looking very encouraging out there.
Yeah, I think one of the fundamental lessons is the stock market is not the economy. And given we had such a strong tech rally, would you say it's just time for a bit of a rotation out of the intangible to the more tangible industrials? Yeah,
so if you think about it, prior to COVID, the technology sector globally was doing very, very well. It was beating value, things like financials, things like energy. COVID came along and technology stocks got an extra ramp up because they became defensive stocks because people shopping online, working from home. And so funnily enough, technology got an extra kick along during that period. So what we're seeing now is since the middle of last year, bond yields have gone up, which is good for financials, banks globally, and oil prices have gone up, which is good for energy. So these are the two major parts of that value, the so-called value parts of the market. So yes, it makes sense that value is and unwinding that underperformance that it had, and that may continue along for a while. So, you know, the so-called, you know, as we're saying, the growth to value rotation, hate to be too jargonistic, but that value rotation can play out for somewhat longer. But again, I wouldn't discount tech and growth, you know, making a comeback later this year. And I think, you know, over the next, you know, 3 to 5 years, let's say, that growth part of the global market is still going to, I think, outperform and do very well.
We've seen you know, the Biden stimulus hit the US, which is good. The Australian dollar's been very strong. What's your view on the Australian economy? Are we looking okay?
Yeah, look, our economy, again, as going back to your point, the market is not the economy. There's a difference. So our economy is doing very well. I mean, we've rebounded even better than the United States. Obviously, we dealt with COVID very well from a global perspective. The earnings outlook here, not as strong. It's still good, but not as strong as we're seeing globally. So our market's rebounding, but again, I don't think there's probably a little bit more constrained. I see more growth in terms of equity markets still globally. But the economy itself, we've had the unemployment rate come down now. It's around about 6.2%. We've got the home builder subsidies, that are the you know, cash grants to you know, renovate your home. We've seen renovations very, very strong. We've seen consumer and business confidence in Australia reach you know, pre-COVID levels, at quite high levels. Interest rates obviously very low, and the central bank promising, as is in the United States and Europe, to basically not raise rates for several years. So we're seeing the housing market take off because of low rates. Obviously, that's helping support the equity market as well. So the economy is looking good. People are worried about JobKeeper, you know, what happens when they end the JobKeeper program. But I think the economy's got enough momentum to deal with withdrawal of that support. We've already had 2 million people leave that program as well, just as the economy's improved already. So again, I think the economy can withstand the removal of that program in the next month or so as well.
Lastly, David, we're seeing the vaccine roll out as we speak, pretty much. It almost seems like a story is ended, and nobody's really talking about COVID anymore. Do you think that that's a little bit premature, or do you think that this is pretty much the end of the story?
Oh, look, again, this is where, as an economist, you know, we're in the hands of COVID and the vaccines and the scientists, really. So I always say I can't forecast what COVID will do. I mean, all I can say, like, the risk is that at the moment we've got various variants of COVID around the world, but the experts are telling us the vaccines that we have can deal with those variants, like the Brazilian variant, the South African variant. So on that basis, yes, we have a lot of confidence. I mean, but again, as I said, there's always that risk that a variant emerges that is immune to the vaccines, and the experts say it's going to take us another year to develop a vaccine to deal with this new variant. I mean, that's what we don't want to hear. So, you know, never say never, but on the basis of what we know at the moment, it's looking pretty good.
Yeah, I think I remember hearing that you know, these sorts of things always mutate.
Yeah,
they were expecting this, so maybe it's just a booster shot every year.
Like with the flu, you know, there's different. You know, they reformulate that every year, and it might eventually get wrapped up into the annual flu shot that we get, and that will help. You know, if enough of us get that vaccine, then it would create that herd immunity that we need. That it won't sort of, you know, run like wildfire through the country every year.
Yeah. Well, thank you very much, David.
No worries. Good to be with you.
Look, essentially, it seems like the real economy is catching up with some aspects of the stock market. You know, wage growth potentially will hold back inflation.
Yeah.
And hopefully things are okay. It does seem like we have some good momentum. So certainly Australia does look quite healthy at the moment. Thank you very much for joining us, guys, and thank you again.
No worries. Great.